Good afternoon, everybody. Welcome to your Monday edition of the Trader Merlin Show. Hope you had a fantastic weekend out there. I got a bunch of questions over the weekend pertaining to cryptocurrency and specific projects, and I thought, you know what, maybe I'll explore a little bit of that as well as go into kind of the contagion of it. I think that we're going to see a lot more pain going forward in the crypto space, but I think it could absolutely bleed into other areas of the financial markets and impact those of you trading equities and individual stocks and maybe even indexes as well. So that will be the talk track for today. Of course, if you guys have comments and questions, you can always email me at TraderMerlin@gmail.com or put them down below any YouTube video, and I will get to those as quickly as possible and incorporate them into the slides as I have done so for today. Now, here's the graphic for today, calling it Crypto Contagion. I tried to put some concerned-looking doctor out there because I guess at this point, it's like the early days of COVID. No one really knew what the hell was going on, and they I guess, got a little overly defensive against this COVID virus, and as we start to learn more and more about it, things relaxed a little bit. But in the crypto space, I think we're still discovering all the fallout from a bunch of other different events, such as Terra Luna, UST, Voyager, Celsius. You have a lot of other events out there that were very damaging to the ecosystem and to the confidence of anybody in it. So I'm going to start off with two specific questions, and then unfortunately I didn't have time to draw out all of the graphics for this, but there's definitely this domino effect that you're going to see or are witnessing as we speak in that crypto space, which could bring more pain, and I'll try to run through it as clearly as I can, what those steps and what those dominoes look like. So let me start things off here with the crypto contagion. So I'm going to read the questions here. Scott says, I know the trend is down, but what about Riot Blockchain at $4? I would be a long-term trade, or it would be a long-term trade. We covered this one a couple weeks ago, but I will gladly go through that. And then the other one is, what are your thoughts on buying Coinbase at these levels? So if we go over here and look at what happened with Coinbase, and don't worry everybody, I will get to the broad markets, etc. later on after I get through this topic. So there we go. Coinbase right now trading at $40.91, so finally broke down below that demand level, closed below it, which is the important part. And what does that mean? Does this mean it's a good buy? Well, before I dive into is it specifically a good buy or not, everybody needs to understand what the magnitude of what happened here. Now, it all started at the top with FTX, right? Everybody knows the drama that's going on with FTX and Sam Bankman-Fried. What's starting to come to light is how clear or how entrenched FTX was in so many other companies. Part of my Crypto Investor Live program, I was mentioning last week that I bought some Solana, and I said this is an incredibly speculative purchase because Solana is tied at the hip to FTX as well as Alameda Research. And if Alameda Research and FTX are forced to liquidate their holdings, which they have almost 1 billion Solana, then this could be a much bigger down move for crypto space going forward. So, I guess we have to figure out who these players are who stand to get knocked out because of FTX. So FTX was an exchange. It was trading people's money, and they shouldn't have been. They were also over-leveraging using FTT token, which gave them this great sense of paper wealth, and people were just valuing that in the billions of dollars, and all of a sudden, this house of cards came crashing down because CZ of Binance said, market sell on all my FTT tokens. Boom. So that's the nutshell of the initial collapse. Now, from there, you also have companies like BlockFi who are now probably going to file bankruptcy. So if you have assets at Celsius, Voyager, BlockFi, your money is not gone, but it's frozen until they can get through a bankruptcy proceeding. What's also coming to light is other companies. So you had BlockFi as one. Yeah, Sol is only down 96%. Yeah, and I bought some at $13.90, and I'm already down huge in less than a week. But again, I bought that 5K with the long-term perspective in place. But yeah, it's absolutely annihilated. And what's funny is if you go out there in the crypto world, there's a bunch of people that just pound the table that Solana is the greatest thing to ever happen to crypto. It's like, well, I think it's flawed. It has a lot of problems, but I like the technology. But anyway, we won't beleaguer that point. So you have BlockFi going under. Then the next piece was Genesis. And this one is a much bigger piece than I think most people really understand. Genesis is a trading company or investment trading / company that is part of a giant conglomeration of digital companies. It's called the DCG, the Digital Companies Group. And in that group, they have things like CoinDesk, which is a news agency. They have tons of other investments, very akin to what Alameda Research has done, but they also have Genesis in there. Grayscale is also part of this tangle. And if we look at Grayscale, which we've talked about many times, which is GBTC, we keep thinking like, well, why is it such a huge discount? Well, it's at a huge discount because everyone's trying to sell their Bitcoin that are in this Grayscale trust. Nobody wants it. So it's just getting cheaper and cheaper and cheaper and cheaper. And I think we may have still have that GBTC piece. Hold on. GBTC. Let me put it in alphabetical order here because I took the GBTC chart and maybe I took it off. I might have deleted that one to show the discount of the premium that you could get for GBTC. And unfortunately, I think I took that one off. But it was trading at like a 70% discount to the price of Bitcoin because people are stuck in it. They're just liquidating that portfolio, even though people like Cathie Wood are making very public announcements that they're just loading the boat on GBTC. She bought a whole bunch more, and she is massively underwater in the last week, right? Just now, I gotta correct you there. You are absolutely wrong. You're completely wrong. It is not the tulip bubble. What you have is a mania over an asset class. It's not. Tulips were a useless plant. You couldn't eat them. It took forever to grow them, and it was a bulb made of flower, and that was just idiocracy. It's the technology that's the important part. It's blockchain, it's decentralized ledgers. That's the important piece here. And if you look at what's being built, it's not a Ponzi scheme with smoke and mirrors. There are actual working instruments in financial markets that are outside of our normal market. Right? I know what you're saying. Well, it's not backed by anything. Well, neither is the US dollar. So we're going to argue that one until we're blue in the face. It's technology that's representing a change fundamentally in the way we've done things. So there are scams out there, and certainly a lot of them are tulip markets or just scams like Shiba Inu or in Dogecoin. But there's other pieces out there that actually represent massive technological changes, things like Ethereum. Right, Ethereum basically made the world's largest decentralized computer that anybody can use at any time by using Ethereum tokens. That's a massive change in technology. So the whole thing isn't a scam. There's a lot of them in there, so let's not label all of it as a scam and tulip mania. But certainly the reason we saw these prices jump up like this is because companies like FTX, like Alameda Research, help fuel that rally, right? They were borrowing huge sums of money, buying more crypto, and then taking that, using that as leverage, and then buying more crypto and more crypto and more crypto. Yes, anybody can create a coin. Well, anybody can grow a tulip too. I can create one in 7 minutes. However, if you're smart and you look at the coin that I create, you'll realize it doesn't have any purpose. There's no utility to the token, just like Shiba Inu. It does not do anything. It's really no use for it at all. But Solana does have a use. It's an access to their ecosystem of products and services, decentralized exchanges, marketplaces, etc. So yes, the fact that anybody can create one, that's absolutely true. But it's our job as consumers to do due diligence and not buy that crap, right? Look at what you're buying so you don't buy something that's absolute trash. And there's tons of that. I mean, I think we looked at it in the CIL the other day. There was over 21,000 different cryptocurrency projects. And I think probably 75% or more of those are just junk, scams, right? So stay away from it. Make sure you look at what you're buying and why you're buying it, because some of them are actually pretty good. Yeah, I wasn't going to take the time to put it all in there, Tom, but since you put it in, I will do it. It's GBTC times 1,000, because GBTC is 1/1000th of a Bitcoin. And then you times that, subtract that from the price of BTCUSD. And that will give you that spread. Oh, great. Where did it go? Are you kidding me? I just had it. Oh, actually, I was already here. So this is the GBTC. So right now it's trading at a $7,000 discount to Bitcoin. And in theory, this GBTC does own Bitcoin. So a lot of people were buying it thinking that it's going to jump all the way back up here to zero and get back to the price of Bitcoin, but it's not. This spread is just not looking good, and it certainly has been weaker. But this is another one of those pieces where GBTC was recently asked, well, hey, you were supposed to have billions of dollars worth of Bitcoin. Can you verify that? Where are you holding this billions of dollars worth of Bitcoin? And GBTC has said, we don't need to answer that because we don't want to disclose we're keeping our Bitcoin for safety reasons. If that's not a red flag, I don't know what is. So this is another piece here that may be a shoe to drop in coming weeks is, what if GBTC is not actually holding the instruments that they say they hold? And what happens if this all of a sudden gets opened up and exposed and they're forced to liquidate, right? It's just a giant what if. But to me, that's another major uncertain piece out there in the crypto space, which could push this market down even more. So you've got the Genesis failure. You've got DCG, which is embroiled now in this. You have Grayscale, and that, of course, is impacting a lot of different markets, right? Because it's targeting trust. And right now, if regulators are questioning cryptocurrency and digital assets, they may go back in there and go and look at Grayscale and really push the issue. And if I'd hope it doesn't happen, right? One of three things is going to happen. Number one, Grayscale will get investigated, and it comes to light that they have everything they're supposed to have, and it's all hunky-dory. Great. That's what should happen. Fingers crossed. Number two is they won't get investigated at all, which I just don't see that happening. There's way too much concern with transparency and liquidity right now. The third option is they get investigated and come to find out they don't own what they say they own, and maybe it's a big miss, and then all of a sudden that comes crashing down. That could be the next giant black swan event, because if GBTC goes down, they may be forced to liquidate whatever Bitcoin they have, and then we could see much deeper slides in crypto. So I'm definitely bearish on the crypto space. I think you've got more pain and uncertainty. Here's Bitcoin, which was interesting when it fell below this 18,000 level. I've been saying in my room with my students that from here you're going to 13 and then you're going to 10. And today's action is pretty ugly. We hit 15.6. It looks to me like we're probably going to go down even more. Let's go to, let's say, a weekly here, right? We've obviously got a long-term uptrend, but look how high above that long-term trend line we are. That long-term trend line says maybe 8,000 when we get there. But to me, it's right around this 10 to 11,000 is that next spot. So I'm like Big Ep. My nano ledger is safely packed away, and I will take a look at it in 2025. Well, I know you're lying to me there, Big Ep. I know there's no way that you could, because I know how you are. I know how I am. I'll be watching the price of Bitcoin, but yeah, I'll be looking at it, but I'm not going to take my ledger out. Actually, my ledger is right here, so I can be moving more stuff onto it. I have three of them. I have three different ledgers, and I'm moving things onto one of them, and then that's going to be put in a safe place and backup seed phrase written down. But yeah, it's a long-term play. And you're like me, just wait a couple years. We'll start to see this market turn around at some point. Yeah, where'd you see that, GD? So you saw a ghost print at 7K. Let me see real quick it wasn't on the futures, right? It was on some exchange. Yeah, so there's nothing there. Sometimes it might be on a spot price. Yeah, I don't see it on the Binance one, Bitstamp, or on the futures. But let me know where you saw that one. If you can, send me a screenshot. That'd be great. So let's keep going down the rabbit hole. So you guys see how it all started with this kind of FTX lack of trust. It snowballed down to the lending protocols like BlockFi and Celsius and Voyager. And then it hit things like Genesis, who was the lending backend for Gemini trading, which of course is getting even uglier. So you're seeing how it impacts everything. And of course, there were two questions. Tim asking about Coinbase at these levels, and another one asking about Riot Blockchain at $4. Remember, the lower that any crypto price goes, the less meat is on the bone, the less value there is for a miner to stay as a miner and continue working. So let's look at Riot Blockchain. You're sub $4 right now. The gentleman's name was Scott. Said, I know the trend is down, but what about Riot Blockchain at $4? It would be a long-term trade. If you're looking at buying long-term on Riot Blockchain, this is a weekly here, and you can see it really has not done much. It hit these lows back in July, and we're right back at those lows, and it looks to me like we're going lower. If you are looking at that price chart, you cannot say, oh, it's cheap, it's $4, and it was $80, it's going back up there. You cannot say that. This may never see $80 again. What you can say is, what are your thoughts on the price of cryptos going forward, and specifically Riot Blockchain? So Riot Blockchain is out there mining different cryptocurrencies. Maybe it's Bitcoin, maybe it could be other proof of work cryptos. Don't know exactly what their mining operation is, but most likely they're doing something with Bitcoin. If Bitcoin continues to slide, Riot Blockchain will go under. So will Marathon, so will any crypto mining company will most likely go under unless they have the reserves to stay alive. I think I may have mentioned this. I was looking at doing mining here from my house in Southern California. Once I did the numbers, there's no way I could ever make money. Even if I was given a free miner, the electricity cost here is just too expensive, and I would ultimately just spend myself into the ground with electricity. Now, some of these places are co-located next to methane plants. They're in states that have very cheap energy costs, and that could help them. But if the price of Bitcoin keeps dropping, there is no incentive for them to run those operations. Just like I used this example before. Let's say you think that there's studies out there, and it may have changed now, but I think like 2 or 3 years ago, it costs about $900 to take an ounce of gold out of the ground. Well, right now, gold's $1,600. Great. But if gold got to $500 an ounce, every miner in the world would say, no, we're stopping operations. There's no point in us spending $900 to get the ground out of the gold out of the ground and then sell it for 500. That was just dumb on all fronts. So I think that's the same thing for crypto. So I got to say, Scott, as far as Riot Blockchain goes, or Marathon, or any of these miners, I wouldn't touch them with a 10-foot pole. I feel like they're going to just keep drifting down. At some point, they might be one where you take a flyer and say, you know what, I'll just take a shot on it, right? But for me, I'm not putting a penny in Marathon or Riot or any of the other ones out there. I just don't feel confident that this is going to turn around anytime soon. I think you've got more time, more pain. And that's why I wanted to kind of show that contagion, because you have all of these pieces that are potentially forcing liquidation of cryptocurrency. You have people right now who may get, is this not a repeat of 2018, only at a bigger scale? Yes. And by the way, just 2018 on a bigger scale, which is just a repeat of what happened in like 2014 on a bigger scale. So, percentage-wise, they're actually the same declines. And we can go back and look at some of those charts, but, markets have dropped over 80%. This is the fourth time it's done it in the crypto space. So, which is kind of the cycle, which is a painful cycle to be in, that's for sure. But ultimately, it will come back up. So, yes, this is a repeat of it in many ways. It has to do with the halving and the structure of the crypto markets. But I could dive deeper into that. You bought some Doge or Robinhood a while ago. Other than all the crypto taking a dump, is it a safe platform? Robinhood? I personally don't like Robinhood. Remember, Robinhood is, everything's free at Robinhood. You don't pay for stock transactions. Options are free. Your cryptocurrency's free, blah, blah, blah. If something's free, then you are the product. So you're generally paying the spread on whatever cryptocurrencies you buy. But is it safe? I don't know. I don't know who's taking custody of your crypto. If your crypto is, and here's the big question mark I would have for anybody who uses Robinhood. Sam Bankman-Fried, who is the guy who started FTX and Alameda Research and the one who is somewhat responsible for this massive market just destruction in crypto and digital assets, one of his major holdings was Robinhood, which kind of scares me because that means he's got his hands in there too. And I don't know what the exposure is or what arrangements were made, but that would make me a little bit nervous about being involved with Robinhood and even holding securities there. Now, hold on before you freak out. Remember, securities are SIPC insured. Depending on the exchange that you're at, Robinhood is going to be SIPC protected. However, are their cryptos safe? That we don't know. We don't know who holds the private keys. It's not you. If you are a Robinhood customer, Robinhood has your private keys. If you're a customer of Coinbase or Kraken or Binance, they all have your private keys. So if they're not your keys, it's not your crypto. So move your crypto, with all I can say. I personally would not want to keep my crypto on Robinhood because of their association with Sam Bankman-Fried. Big Ep says short hood. Remember, I was very bearish on that a long time ago, but it just looks dead, right? It just, the way it's moving, I wouldn't touch it. I wouldn't go long. I wouldn't go short. It's trading $8.85, and it really just kind of has floundered for a year. I would leave it alone, but I wouldn't trust it. And again, don't trust any exchange. Don't trust any digital marketplace right now. Even decentralized marketplaces I'm nervous on. So if you can, you should pull your money off of any centralized exchange. Now, to the other part here, this was Tim's question, which is, what are your thoughts on buying Coinbase at these levels? Well, this is where I think you run into bigger problems because Coinbase, let's go over and look at Coinbase, which I am a fan of. I think Coinbase is awesome. However, that chart screams to stay short, right? It basically says if you're not short, even open short positions based off what you're seeing here. And part of the reason is just outright uncertainty. We still don't know, truthfully, with 100% transparency, what Coinbase's exposure was to FTX or Terra Luna or UST or anything like that, right? To me, that is the big unknown. And if we start to see unwinding of crypto positions, that's going to hurt Coinbase even more. And withdrawing of assets from people like myself, who are pulling whatever we can off those exchanges, is hurting them because now they don't have a strong balance sheet anymore. And if there is a bigger, further run on their bank, meaning the crypto gets taken out, they could find themselves in a liquidation type of position, just like you saw with, Voyager or Celsius or maybe even Gemini here going forward. So I just think that the negativity out there in this space is too overwhelming to want to buy right now. Now, you guys may have all heard the phrase from Warren Buffett, when there's blood in the streets, that's when you want to be a buyer, right? In the crypto space, not only is there blood in the streets, but I mean, bodies are falling from the sky, if you will. It's a horrible analogy, but until that slows down a little bit, I think that this contagion most likely is going to grow. It's going to continue. So on both of these accounts, from questions from viewers, which were, what are your thoughts on buying Coinbase at these levels? I'm not interested. I like Coinbase. I really do. I think Brian Armstrong's doing a great job. I like the way they're approaching it. They're not taking out customer funds and lending them out. At least that's their disclosure. But I still don't like this chart. It looks bad. And I would, since we broke that line there, which is at 45.22, here we are at 41. I just say short him if you got him. Unlike Jim Cramer, who said he likes this thing at $400, it still looks pretty ugly for the long-term perspective. And then, Mara, right? So here's Marathon. I mean, this is just the definition of a downtrend and a massive descending triangle going on Mara on the weekly. Say you stay short or just stay out of it. At least wait for the blood to coagulate. There you go, Steve. And our disgusting analogies here. Yeah, at some point, if Coinbase doesn't go bankrupt from running out of funds because of customer withdrawals, then I think at some point Coinbase is going to be a great buy. I can't emphasize that enough. I am hoping I have a lot of powder dry when that finally settles, because I do think that Coinbase will be one of the ones to rise from this because of their position, and they're not lending cryptocurrencies, but we just don't know. So I would pull my assets off of Coinbase or Kraken or Binance or Gemini or any exchange, put them on cold storage devices. I've been saying over and over and over again, keep your keys for another 6 months, maybe a year. And once this starts to filter out, and once we find where all the bodies are buried in FTX and Alameda Research, then I think it's going to represent a significant bottom in the crypto markets and lead us into one of the biggest bull market rallies we've ever had. But that could be a couple of years from now for that to happen. So, Tim and Scott, I am not buying any companies related to, at least publicly traded ones related to cryptocurrencies. Fallout is still going to be damaging going forward, so I'd stay out of it. Let's see. I saw a comment here from Jay. Jay, thank you so much for the contribution. I just got my ledger today. When do I need the private keys? I can see. So you only need your so when you get your ledger device, right, you're given that little piece of paper and has 24 little blank lines, and you're supposed to write down all the words. That's your seed phrase. That is the most valuable piece of information you have, right? So make sure when you have your cold storage device, whether it's Nano Ledger, LedgerX, Trezor, Keep Key, or whatever it is, write down your seed phrase, and I would quadruple check that to make sure you are absolutely sure you wrote them all down right, and then put that in a very, very safe place. When you withdraw, and sometimes actually when you deposit to a ledger, you have to put in your password, but you won't need to put in your seed phrase, right? There's a simple password that you can use. You can do a 4-character, or I think there's an 8-character as well, like a PIN code, if you will. So that's when you would need it to move funds on and off of this device. If you ever lose this device, this is where your seed phrase is really critical. If you lose it, or there's some technical issue, or it gets thrown in a blender, your dog chews it up, or somebody steals it, right? Let's say somebody breaks into my house and actually steals this. I'm really not that concerned. I'm not worried at all, because I have the seed phrase. I will buy another ledger. I'll put in the seed phrase I have for this one in the new ledger, and I will access that account. So your seed phrase is really allowing you to access the overall account. Now, when you want to transfer on and off the device, you simply have to put in your code, PIN code, not your seed phrase every time. Hopefully that helped, Jay Best. Let's see. And Tim, why'd you buy Doge? Did you buy Doge because of Elon Musk? I bet you bought it because of Elon Musk. Why buy Riot or other? Why not just buy the underlying digital asset? True. There may come a time, Big Eb and others, there may come a time if the price of Bitcoin does start to run and some of these companies can now acquire other miners that have gone out of business, where they can lower their cost basis. So for example, I'm making numbers up right now, everybody, just as an example off the top of my head. If I'm Riot Blockchain and Mara is my competitor, right? So you got Riot and Mara. Let's say that Riot Blockchain is just slightly better managed. They got a little bit more money in their bank account, and Mara goes under. They can no longer survive. They go under, and they go bankrupt, right? Well, they'll have to sell their assets. And what are their assets? Mining equipment. So Riot may be able to go in there and buy a $10,000 miner from Mara at let's say 5,000. So all of a sudden, I have now mathematically, because of this purchase of bankrupt assets at Marathon, Riot can now lower their cost per Bitcoin acquisition because they have more mining power. So that may be one thing that could create some competitive advantages down the road, but time will tell. I mean, I do believe you're going to see several. I think I did a special here. I'm not sure if it was here or with my CIL, where I showed a whole list of the miners in just the US, and there's like 13 different crypto mining companies that are publicly traded here in the US. Out of all those, to me, it's like a .com business. You'll probably have a few that survive, a few that will survive from it, and I just don't know who those are going to be at this point. Great. The science behind crypto is based on Metcalfe's law. So if the situation has scared off millions, especially institutional funds, it is not long until buying volume comes back into this chart. Well, it's not. The greater fool theory is certainly a part of it for some crypto assets like Shiba Inu, right? It's a greater fool. For others, it's adoption and implementation. And things like Ethereum are starting to see more and more applications that are hitting the real world markets. You know, I've talked a lot about things like LivePeer or RenderCoin or even Golem, where they're using the Ethereum network to be industry disruptors in a specific market segment. As that gains more adoption, you need Ethereum to access those markets. So that to me brings in the next wave and more people buying into it, utilizing the technology, and therefore the next surge is coming. All right, let me. Can you take a look at? Yeah, let me finish with this first, Eric, and then I'll go look at your micro CLs. Any questions there? I mean, I wanted to make. Oh yeah, there's one more. So you have something like Coinbase, which right now I'm looking at going, man, it's like a 50-50 thing for me. Is Coinbase going to make it? Mara, Riot, I'm pretty sure one of these is going to drop away. It just there's no money in the market for them anymore. Then there's MicroStrategy. MicroStrategy has a massive position in Bitcoin. They're down 7.5% today. A very ugly chart. This is a weekly of MicroStrategy. And of course, you guys know Michael Saylor is, he is the poster child for Bitcoin. He's just evangelical out there and pounding the tables on why Bitcoin is the greatest thing ever to hit the world. Well, I think there's definitely some merits behind the positive side of Bitcoin. However, if it doesn't get adoption, etc., there may be some problems. Now, the thing to remember here is MicroStrategy has a couple $100 million loan that's backed by Bitcoin. And if that loan gets margined out, meaning Bitcoin falls low enough, he will be forced to sell some Bitcoin. At this point right now, the liquidation price for Michael Saylor's Bitcoin position is $13,500. So if we get, let me put a new red line on here, and I'll put right there, and I'll put the value on here is 13,500, and then we'll also label this bad boy, and I'm going to say this is MicroStrategy's liquidation price. MSTR liquidation. I spelled liquidation wrong. Sorry about that, but whatever. So we'll put that right there and just leave this one, because if that happens, then all of a sudden he may be forced to sell some of his Bitcoin, and that could further create more downside movement. So, you look, there's so many factors here of uncertainty and liquidations that to me really paint the picture of an ugly crypto contagion in the market going forward. And hopefully, it's already hurt me significantly from a financial perspective, but it was all paper profits anyway, and I'm a long-term holder. So, it sucks to watch your markets drop, but it is what it is. I'm not that concerned because in the long run, I'll probably be okay. But there's my thoughts on Contagion. Why is Bitcoin falling in price? I would think that the value would increase during inflationary times. No, I think it's more about, if you think of risk on versus risk off discussion, right? Naum, you know that one. Risk on is, hey, I'm going to equity markets. Risk off is I'm going to bond markets, typically. Well, and you would say risk off would be gold and silver if you're trying to get away from the risk of the markets, but that's also kind of a fallacy because gold and silver are very volatile. However, if you are looking at crypto, there was the talk track years ago that, it's an inflation hedge. Well, not really. I'm not seeing that anymore. And I'm seeing it more of like, you have a risk on asset, you have a risk off asset, and then you have a load me up with risk asset. And that's crypto. So So I think what you're seeing are a lot of people who are just getting out of the crypto digital asset space altogether, therefore selling their Bitcoin just to earn money. And remember, a lot of these miners, Mara, Riot Blockchain, had thousands and thousands of Bitcoin on their balance sheets. Why? Because they're mining Bitcoin, and then when they solve a block of data, they're paid 6.25 Bitcoin per block, and they just put it in their coffers and store it. Why? Because Bitcoin was going parabolic. So why would I mine something that, let's say it cost me, I'm making up the number, let's say it cost me 15,000 per Bitcoin. Why would I mine that and then dump it right away when 6 months, a year down the road, it's going to be 3-4 times as much, right? That's what miners were thinking. So miners are building big positions in crypto. But now because the prices have fallen so much, a lot of the miners are taking their reserves of Bitcoin and now forced to sell to cover operation expenses. So that's another reason why you're seeing the price of Bitcoin fall. And really, it's the broad uncertainty that's scaring everybody. What's happened in the past month is just screaming of regulation. We're probably going to hear somebody get in there, get heavy-handed, where we're not like arguing and fighting over real catastrophic issues that face the economy, like Hunter Biden's phone records. Let's solve some real issues that are hurting people on a much bigger scale. Let's figure out how to regulate these markets so that investors like you and me don't get burned by exchanges going under doing shady crap. And then let's figure out how we can put people like Sam Bankman-Fried into jail. All right, Thomas, are you recommending we move out of Kraken and Binance and move those coins? From a safety perspective, Jill, I would say yes. I'd move off of Coinbase, Binance, and Kraken and just go to any centralized exchange. I don't care where it's at. The general recommendation would be move everything off of an exchange. It's their money. And if this contagion continues to build and Coinbase gets into trouble, which is a possibility. I've heard people say Coinbase could go bankrupt. If Coinbase goes bankrupt, then same thing happens. It happened at Voyager and Celsius and BlockFi. Those assets will be frozen and they're not yours anymore. They're part of the estate of the financial firm, or in this case, Coinbase. So that's why I would say move it. I think that's probably the best thing to do is just to put it in cold storage. Now, in full disclosure, I have a couple $1,000s at Coinbase, but I have a lot sitting at Binance and I have a lot sitting at Kraken. And those are staked assets, which I would think is going to be safer. But part of I've got a lot of stuff on my plate right now, but what I'm going to most likely be doing is finding all of the instruments. And this is actually part of the CIL, which I'll be doing this week, is I will be taking any asset that I can remove that's staked currently and move it into self-staking from my Nano Ledger. I'm going to be doing that. And that to me is probably the most important part, is to have self-custody, but also to be staking from my own device. Because when you look at Binance, when you look at Kraken, and they say, oh, we're staking those instruments, I have to trust them. And my trust in centralized entities, even before cryptocurrencies, has been very, very small. And now I think it's even worse. Yeah, I'm staked at both. So I have Ethereum staked over at Binance, which, I cannot move. I can't do anything with that. So that's going to be stuck there. But I do have some Solana over there. I have some Cosmos. I have some a little bit of Cardano, and all that I can self-stake. So I will probably do that. I'll probably move anything that's non-custodial on Kraken and Binance and move it to my ledger, and then I'll show for my students, how do you self-stake those things. It's a bit more complicated of a process to select validators and voting rights and things like that, but that's part of the class this week. So we took all mine off of Kraken the other day. Some balances are too small. Yeah, right. It bug you. You got you have this small amount of cryptocurrency. Like, well, wait a minute. If I move it, the fee's higher than what I have there. I'll just leave it there. Hopefully, it'll be something someday. Blue Diesel. Good to see you, Blue. Just bought some Bitcoin. That means it's going down some more with my luck. Well, I think it's going down, period. But I think 6 months, the whole space is going down. 6 years, you're going to have you'll look back and this will be a blip on the radar. It'll be just a tiny little bit. When is the next ETH update? That's when I can unstake. It's not the next ETH update. There's going to be a lot of updates. What you're waiting for is something called the Shanghai upgrade. Now, when that happens, which is supposed to be in Q1 of this year, or of 2023, then you'll be able to remove crypto off the exchange. But we'll talk about that when it gets closer. Yep, I've got my Atom on my ledger as well. And Atom was easy. Polkadot was tricky. Yeah, Polkadot was tough. Tron is kind of a pain in the butt as well, but I won't be covering that on this show. We'll do it at a different time. All right, let me, time-wise, what do I got? Holy cow. Let's see. Oh, and on Friday or Thursday's show, I was telling you that I bought a 1 crude oil contract at 81.50, or I think it's 81.50, and of course the next day the market just dropped, stopped me out, took a nice loss on that one for one contract. But it brought up the discussion of when do you roll into the new contract? What messed me up with this one is, generally, when I'm looking at the December contracts, I'm trading the Z. But crude oil trades weird. It stops a month before. So the contract expires today. Today's the last day of the CL. And yes, you're right. The CLF is what you'd be trading the 2023 right now. So yes, generally I'm looking at the volume. But when I do almost all my futures on indexes, and those indexes, the volume switches over maybe 2 weeks before the contract expires. That's what threw me off with the CL. When you guys mentioned, I was like, oh yeah, crap, they have a pause way earlier. I'll show you what I mean. If you look here, and let's go to how about ESU 2022, right? So that's going to be the S&P September futures contract. And here's why I got all screwed up. So if you look at it, notice the little icon right here that says when they expire. And this expired Friday, the 16th of September. Okay, well, that was the day that contract expired, and this was the September future, so that's normal. And you'll be able to see the volume drift off about 2 weeks before, right? It really started to drop there. But look when I look at CLU 2022. Notice that this icon right here, which should expire September 16th like the other one, was actually August 22nd. So it actually stopped a month before. It's a month before expiration. This contract just stops altogether. So that's what threw me off. I was like, wait a minute, I'm in the right contract, and you guys are absolutely right. You can tell I do a ton with crude oil futures. But yes, I would definitely be watching the volume, and it was kind of silly for me to trade that on Thursday, but I was planning on dumping it on Friday anyway, and good news is I did. So there we go, and took a small loss on that one. Do you think real estate and stock market crashes might be coming, are going to hammer crypto further? Yes. Main reason for that, Shinobi, is I think that people have assets tied up in crypto. And I think people now are going to start liquidating assets to get cash to maybe pay their mortgages or just live day to day with all these crazy layoffs coming. So I do think that the financial situation could impact cryptocurrencies withdrawals and those accounts getting lower. I mean, right now you have a complete lack of confidence and trust in anything to do with digital assets or crypto. Let's see real quick. Let me get to this one. So Skilled Stockman says, I love to trade trade opening range breakouts, copper, gold, oil. It's just by that time of day, my capital is tied up in overnight Globex trades, so I don't do it much and just see how much I could have made if the capital was there. Damn. Well, what I would recommend is if that's a case, Skilled Stocksman, I mean, if you know you could have made a lot more at that point in time, then maybe you don't lock up your capital in the Globex trades and focus on trading that opening range breakout. To me, this is about the analysis and reviewing. And if you know that that's the case for you, then I highly recommend rethinking. I weigh the two. Are you making more on trading that Globex session, or would you be making more just trading that opening range breakout? One of those is going to be much easier from a time commitment perspective, and that's the opening range breakout, right? You know you've got your opening range, and you establish your breakout points, make trades on it. If it doesn't happen, don't worry. My old mantra, I used to call myself the 90-minute trader. That's what I called myself in the U.S., and I was in Italy. I would call myself Zenzade, which means mosquito, because I basically just get a little and get out. Those types of breakout trades are great. I think fading breakouts or just opening range gaps, opening range breakouts as well as gap fills in the morning can be great. You just have to be very quick because the markets move so quick in that opening 30 minutes. Actually, 15 is really the crazy portion. And if you're on the wrong side of it, it can destroy you. So I am definitely a fan of the opening range breakout trades. I think that's a pretty good strategy to employ. But do the analysis, Skilled. You might be able to keep yourself sleeping better by not trading the Globex and focusing on just the breakouts and start your day with a little bit of capital and move on. I love the whole day trading side of things. I don't like to leave money in the markets. It just bugs me. When I do, I'm generally going to be diversified with longer term stuff. All right, let me see. Fidelity is going to be making crypto available to their platform soon. They will sell Bitcoin in a few hours. Yes. Yeah, it's predominantly, I think, Bitcoin and Ethereum are the main two, and then they might start. But you have to be an accredited investor from what I was reading. Like, it's not mainstream yet. It's just for people with a boatload of money. So I don't think that's that big of a deal. What is encouraging is Fidelity is now doing crypto, right? So it'll start off at institutional and then it'll trickle down and get to the retail person in the end. Yeah. I mean, hey, it's just the nature of the beast. It's going to be ugly for a little bit. Unfortunately, that's just the way it is. Let's see. Les said, can you take a look at the Russell Daily and tell us how we might interpret the chart? Sure. Why don't we do that? Actually, let me run through our top 7. We'll go from bottom to top, and then we will. I'll specifically focus on the Russell here as we wind things down. All right. So down there at the bottom, you have the worst one, which is going to be Bitcoin. You can see not the best looking chart. It looks actually very bad. Take the volume off. Here we are getting right near the lows. Surprisingly, you saw Bitcoin fall. The guy who hacked FTX's accounts, which some people say is the government of the Bahamas, just converted the Ethereum into Bitcoin. So this drama just gets weirder and weirder and weirder. Bottom line is, this looks horrible, right? You look at that chart right there. It looks really, really, really bad. More downside movement. It almost looks like what's called a bearish pennant formation, which is this aggressive sell-off. It's still making lower highs but higher lows, and generally when it breaks, it's in the same direction of the prevailing trend, which for my analysis would put Bitcoin at $10,000 in a very short period of time. So let's keep our eye on that one. It could be pretty damn ugly. Moving up, NASDAQ. So we have the NQs today. I sold some covered calls against my triple Q position today, generated some income. I did not add to my put positions on the NASDAQ or the S&P today. I did sell a bunch of puts on... what did I sell puts? I put puts on silver today. I sold XLY, consumer discretionary, and I sold some Tesla puts, which is rare for me, but I did that today. I'll show you that in here in just a second. So NASDAQ down 1.02%, closing on a rather negative note there. You can see kind of near those lows. Just based off this picture, it just feels like the NASDAQ's rolling over, and my gut would tell me that if it does roll over, it's going to come back and challenge the origin of this last move, which is right around 10,800, which would be a significant drop. Now, if I slice this into a 4-hour time frame, that brings us all the way down to 10,882. There really is no stopping along that up move, so I don't see any strong demand zones, which would really draw my attention. Maybe something around the 11,004, but that still means a significant move for potential downside movement here. Let's go. Oh, yeah, I got to talk to Ryan about that. It was supposed to, I thought we were going to do it this week, but I think I may get messed up with the Thanksgiving piece. But we've got two selected and going through those. Now, let me go higher. Gold, down 0.84%. So my gold and some of my silver was taken away. I had the $19 call options against my position, so got that taken away. I'm debating selling some more puts on silver or gold, but we'll wait and see. Right now, I have a target on gold of 17.15. I think we're going to probably pull right back into that demand zone that started this rally up, and we'll see. That might actually be where I start to sell more puts. And there's a couple different demand zones on gold. If you guys are in the mastermind grid, this is one that was popped out there, and I mentioned that in the Monday Morning Must-Knows that I do for OTA. But that was, I think it's a great level here on gold, which we may see here shortly if it keeps on drifting down. It's only another 25 points away on gold. Russell 2000 was down 0.54%. We'll look at this one deeper in just a second for less. S&P 500 down 0.40, really showing some strength today. You notice the last 5 trading sessions have really been pretty much sideways, right? It's just totally sideways, really not a lot of action for, looks like, 6-7 days, although it's compressing. So really kind of curious to see how this breaks out. Normally, when you have a really aggressive move, kind of like we saw on the Bitcoin price chart, you have this impulse move, hesitation, and generally that breakout's going to be to the upside, but we'll have to wait and see. If it does, it kind of lines up perfectly with this target of S&P right around 4150, 4160 mark. Here's your Dow. Down 0.12%, so call it fairly unchanged. But the good news for anybody who's long on the Dow is it's just been sitting right along that top supply level, right? Just kind of hugging it, so that's pretty good. And lastly, crude oil. You have a gigantic hammer formation today, although really aggressive sell-off earlier. I actually sold puts on XLE. I sold 20 puts on XLE for the, let's go, XLE. This is such a great move today. I was actually selling the $80 calls, $80 puts. So I have 1080s and 1081s. So I'm all the way down here collected a very nice rate of return, and then all of a sudden, look at this 5-minute chart today. It was just XLE was just tanking. Then all of a sudden, it's almost like it was waiting for me. And I sold those puts, and it screamed to the upside. Nice start to a put position that I was selling because I collected premium and hope those just expire worthless. But pretty nice move there in XLE. I don't know exactly all the reasons why that happened, but you have a big hammer formation on energy, which is great for anybody who's bullish on XLE or crude oil. Okay, what else do I got it here? I'll bring Ryan Watkins on. Yep. Boatload. No, very reverend. When is David Warner on the show? I don't know when David's come back on. He's welcome anytime. He knows that. David is always welcome on the show. He's one of my favorites. Just a good person. You like good people. Everybody likes good people. Let's see. So let's go real quick. All right, T. And let's just look at the Russell 2000 futures. That's easier for me, which is the RTY. So here's your Russell. And you're asking, like, well, what's your thought? How might you interpret this? Well, for me, it's actually pretty easy, right? When I look at what's going on here, yeah, I definitely knew it was news related. And you don't get moves like that without news related, but I just haven't had the time to check and see what was the catalyst. I was just lucky to be the random beneficiary of a nice spike up in something when I had just sold the puts minutes before. I was pretty happy about that. To Les's point, what do we look at here? Well, if I'm looking at this longer term chart, and let's just start off with the daily going back a couple of years, it still looks weak from what you saw in late 2021 to where we are today, right? It's still on a broader downtrend. However, the good news is, if we look at the shorter time frame, really going back to late September, it's been making, I never look at that. You mean I never look at, you're talking this bad boy. It's still the same basic picture, right? Your openings and closings are going to be slightly different. Remember, the S&P futures is forward-looking, so it's going to be slightly different. If this is just the cash index, yes, it's going to have gaps. It's going to have the actual summation, if you will, of all 2,000 instruments. So it's still the same basic picture. What I'm looking at here is still something that in the medium to long-term picture looks weak. Now all of a sudden, it's like it feels like you've got a channel forming on the Russell, and that channel for me would look something like this. Right through there. Let's tailor this one a little bit more. I know for those of you who listen to podcasts, I'm sorry, I know I can't define. I'm basically going through the highs, lines across the highs going back from September through where we are today, and connecting the lows from September to where we are today. And you have this kind of, it's really a channel, but a lot of people call that a wedge formation. Bottom line is, I'm looking to buy if it comes down to the bottom end of this blue uptrend, and potentially sell when we get up to the top. That's pretty much all I would be thinking of here with the Russell 2000. Now, this is where we have to take a step back and go, all right, well, what's my thought for the remainder of the year? Here we are in November, mid-November. We're going to have Thanksgiving this week. I hope you all are going to go spend some time with your family and do things, say some things to your loved ones and in-laws that you regret. That always makes Thanksgiving fun. Don't drink too much. But we are getting near that period of time where we have the proverbial Santa Claus rally, right? And getting down to the last 5 days of the year and the first 2 of next year is that Santa Claus rally, which historically is a great rate of return. So if you're looking at these charts thinking maybe now's the time to be bullish, maybe a little holiday cheer, you're getting down to the point in the Russell where that might actually be a pretty good buy point. I have some pretty decent sized put positions, which I almost closed some of them out today. I'll let you know in the coming days if I do. Part of me thinks I'm just going to be going to cash here. Shorting the market going into Christmas is a mistake I told myself I would never, ever, ever do again. After my biggest single losing trade, which was Best Buy back in 2013, I shorted going into the holiday season massively, and it just never happened. It actually kept soaring and soaring and soaring, and then, of course, when they came out in January with their earnings, Best Buy tanked. So I have a hard time, based off my past experience, holding big position short going into the end of the year. So I may actually start to close out some of my shorts just to be safe and not relive the pain that I had back in 2013. Which begs the question, do you now start to buy some call options and go long on these markets? The charts are definitely looking better for some instruments, like the Russell 2000, certainly starting to look better. S&P 500, starting to look better, right? We broke that yellow supply zone. It's still hugging it, so it hasn't really convincingly broke it, but we're making higher highs. We're starting to make some higher lows. And that's the same for a lot of these market indexes. They've recently broken through some prior highs, which doesn't mean we're out of the woods. It just means that optimism is slowly flowing back into those equity markets. And I kind of have this gut feeling that may run through the end of the year. So I'll let you know if I switch out my positions and start going long. Lately, right now, just selling a bunch of puts and collecting my premium. Now, the last one was Tesla. I got a great rate of turn today on Tesla. So Tesla, I think Tesla's going down. I think Tesla's probably going to go down quite a bit. However, I was looking at some of the call options today, and I sold the 140s. Sorry, put options. I sold the 140s, which are right there. That's the lower red dotted line. And those are for December, right? All the way down there. It kind of lines up right here with this origin of the big gap. So I'm actually fine owning it there. But the premium I collected was significant. I don't remember the exact rate of return percentage. I think it was like a 5% rate of return to commit myself to buy $28 lower on Tesla. I mean, that's great stuff. Although look at the chart. I mean, dangerous. I mean, that's catching a falling knife. However, I'm catching a falling knife at a demand zone that I feel pretty comfortable going long at, right? It was the origin of this big gap up. It's actually slightly lower. It's actually 134 would be that level, but the premium at 140 was fine for me to take that. So did that one today, and I'll probably be buying some more. I might buy some more call options or sell more puts here in the coming days, but had to put some capital to use as options expired last Friday. All right, let's go into earnings calendar. Now, tomorrow you have Baidu, which is one that always seems to push their earnings around. They're scheduled to be before market open, as pretty much everything is here. But given the retail numbers we saw last week, you had really good numbers from retailers. Well, Best Buy, Abercrombie & Fitch, Nordstrom's, Dollar Tree, Burlington stores all report earnings tomorrow. You also have Medtronic and Canadian Solar, so that should be an interesting day there. And then, from an economic perspective, the data is pretty good. You can see Canada has retail sales numbers coming out tomorrow, and that actually is not expected to be good at all. You can see they were 0.7% gain. They're actually looking at a 0.5% slide, so that's ugly transition there for Canada. But really, as far as U.S. goes, not a lot of hard-hitting economic data other than the Richmond Manufacturing Index, which is a yawn. And then at the bottom, that's probably the biggest news, and that's going to happen after tomorrow's show anyway, which is going to be New Zealand dollar coming out with their rate announcement and going up 75 basis points. Glenn Robinson, you just got yourself blocked. That's it. You got me cheering the Cardinals? You know this is a Niners show. Are you kidding me? No, I'm kidding. So, wait, I think I can... There we go. How about that? There you go, Glenn. Niners all day. We're going to make it to the playoffs this year. Mark my words. Anyway, good luck to you, Glenn. I hope your team plays terrible. Although I love Colt McCoy. I liked him when he was at Texas. Good kid. Rob says, is it a bear flag? No, not a bear flag. A bear flag in that the way that piece was trending looked like the flag, but where's the pole, right? There was no pole on that, and you have to have a pole to have the flag. Oh, the Raiders. Oh, and man, the Vikings, how bad did they play? 40-3 against the Cowboys? Wow. Crazy, crazy stuff. Anyway, good to see we got football fans here. That's it for the economic calendar. That's it for the earnings calendar. That's it for my crypto Contagion special. Not that it's special, but it was just some viewpoints, and maybe I opened up some perspectives on how interconnected this whole thing is. And it's not just crypto. This ties straight through to the equity markets. MicroStrategy, Coinbase could also be impacted severely as some of these miners, but Contagion is definitely a major topic. All right, tomorrow I've got John Rowland on the show. Excited to have him on. As you guys know, this is going to be a shorter week, so I'll have John Rowland on the show tomorrow. And then Wednesday, it will just be me, probably with a nice glass of whiskey, because I'm not going to do a show Thursday or Friday, as we'll all be doing something else and enjoying life, not worrying about financial markets. Because, guys, it's a holiday week. Thanksgiving week is generally a very light trading volume week, which doesn't mean you're not going to get big moves. It just means there's generally less liquidity. So things can get wild in a hurry, but those, to me, tend to be dangerous times. And honestly, out of all the trading days of the year, does it really hurt you to take a half a day off, right? You get a half a day on Friday, Thursday market's closed, so make it a 4-day weekend and go do something fun. But I will see you guys tomorrow with John Rowland. If you have something you want us to talk about, put them down below in the comments on any of the YouTube videos, or email me at TraderMerlin@gmail.com. That said, have a fantastic trading day tomorrow, everybody. I'll see you then.